Hello and welcome to the Movers and Shakers show, the monthly show where I try to see what the biggest trends are within the indices, FX and commodities space to try and ascertain exactly whether these trends are going to continue or are due a reversal. So let's get into it. So first and foremost, we can see right here that the first area we're talking about is indices. And as we can see, the main gainer over the course of the past month has been the Russell 2000. Interestingly, seeing a major divergence between the Russell and the likes of the S&P 500, which gained roughly 2%. The Russell gaining 7%. Now, of course, what does this tell us? It tells us that there is a broadening in terms of the gains for US equities, people seeking stocks aside from just the big tech names, but also this idea that we're moving into a phase where we're going to see lower interest rates. Now, remember, many of the businesses within the Russell 2000 are loss-making. They're not profitable. And therefore, they are heavily reliant on funding and borrowing, right? So you see elevated interest rates that would be detrimental to them. As soon as we start to see rates coming down in a meaningful manner, that is beneficial for these companies. So certainly, as we move into a phase of easing, so it should benefit the Russell 2000. At the same time, the fact that they're not particularly profitable means they're highly reliant on the business cycle, the direction of the economy, much more so than, say, your big tech names that are pretty much just printing money irrespective. And many of the AI names are simply selling, like Nvidia, selling to big tech companies, right? Whereas Russell 2000 aren't necessarily in that position. Finally, worth bearing in mind that when you're looking at the policies under Donald Trump, not all of them, when it comes to trade, are beneficial for US companies, which are highly internationalized in basis. So they might be selling abroad, they might be buying from abroad, but they're highly internationalized. The smaller companies are probably less so. They're more likely to be domestic in focus. And so these tariffs actually make them more competitive against many of the international competitors. So all of that really rounds up into a reasoning why we've seen outperformance in terms of the Russell 2000. Now, the flip side of it is the Nifty over in India, where, of course, we've seen a breakdown in relations with the US, the 50% tariffs coming into play as they tried to push them away from Russian crude. They don't seem to be doing exactly that, and instead getting closer to their BRICS partners and moving away from the US. And so that, of course, has knock-on implications. The benefits are largely going to be outweighed by the downsides because over the near term, the breakdown in relations with the US and a sharp rise in terms of tariffs is detrimental, because the benefits from trying to strike closer agreements are only going to be fairly marginal in basis at the beginning. So let's look at the charts for these two and see exactly how they're stacking up. We're going to kick off with the Russell 2000. And as we can see here, the weekly time frame shows you that we've been on a very strong run from the April lows, much like the rest of the US markets. That's where it sort of bottomed out. Let's see this in comparison to the likes of the NASDAQ, right? So we can put that here. So we can see that it's the NASDAQ sort of run away with it. Let's just look at actually from the lows. It's probably better on the daily time frame. Here we go. It's from those April lows. So we've seen the NASDAQ really leading the way, and then more recently, over the course of this last month, seen that gap really closed up. So the Russell 2000 catching up. If we look over the weekly time frame, though, the longer term time frame, there's plenty of catching up to do. The NASDAQ clearly well above the highs of February, whereas the Russell 2000 still significantly below that level. So there should be further room for upside when it comes to the Russell 2000. If we're looking at the trend itself, you'd be looking at something that essentially has pullbacks and consolidations built within it, right? So you can see that pullback here in mid-August and then that next leg higher on the 21st. And now we're sort of creeping higher. Ultimately, it means I'm expecting further gains, but when we do see a pullback, as long as we don't see a breakdown through your price swing low, which currently lands at 22.52, as long as we don't break that level, the near-term pullbacks are deemed short-term in nature and just part of the process for a bullish market. In terms of the Nifty 50, you can see the pullback really is just part of the sort of ebb and flow of price action over recent months, right? So just kind of where the months land in terms of the beginning and the end can significantly influence it, because we've seen sort of really dour months, we've seen very strong months, at the moment, yes, we saw weakness, but it's taken us back down to the lows that we saw earlier in the month. So notably, we're sort of around an area that could actually represent significant support. So you can see this zone 24344, 24462. That's an interesting zone. If we break it, then you're looking at this potential head and shoulders formation here, right? So if we break the 24344 level, then it starts looking a little bit more troublesome. But we're not there at the moment, and we're starting to see the bulls coming back into play. So this is a potential area for a bullish reversal, and the bullish engulfing pattern that looks to have kickstarted the new month does signal the potential for a little bit of upside over the near term at least. Certainly would need to see a break up through this right shoulder of 251.53 to give us greater confidence that the worst is over for the Nifty 50. Next up, let's take a look at the FX space, and we can see that ultimately it's the Japanese yen that has been strengthening at the expense of the US dollar. Certainly it feels like we're seeing a sort of flip between these relationships, right? And generally it has been the case of the US dollar underperforming over the course of Donald Trump's sort of second reign in the White House, and that haven demand is going elsewhere. It's going into the likes of the Japanese yen in particular. And notably, we're seeing in terms of the Japanese yen, let's just jump onto it here. Here we go. So this is the dollar yen itself. Notably, what we're seeing here is this sort of recovery taking place. And so really, like we're talking about, the breakdown in terms of where the month ends and begins is really just determining this rather than the trend itself. So when we're looking at this, you can say, well, we're actually within a sort of recovery phase at the moment. But then we've seen the rally, the pullback, and now we've been consolidating since then. So there is a sort of warning sign that potentially we could see this start to weaken. But at the moment, we haven't seen it because that would be a breakthrough 145.85. Until that happens, this sort of sideways consolidation could quite easily be a sort of deep retracement before we continue the recovery phase that's been dominating over the course of recent months. You can see the price action has been getting below that 76.4 fib, but it's sort of just roughly around that area. So wouldn't necessarily say that I'm super bearish of this at the moment unless we see the 145.85 level broken. But really, we're seeing sort of quite a lot of indecision, because normally within pullbacks, they wouldn't necessarily last as long as this, right? You'd see it like this, a few days, and then you see the bulls back into play. We've seen a pullback, and now it's just like flatlining, essentially. So there's a lot of indecision. And so the bullish sort of recovery trade that's been playing out over recent months does still remain in play, but there's quite a lot of hesitation playing out at the moment. Look out for this it's the 50-day SMA. At the moment now coming into play, you can see in the past it has sort of roughly tallied up with some peaks. So now we're sort of starting to respect it a little bit. So keep an eye out for that. But certainly this one's a little bit more of a question mark, quite frankly. The long-term trend, of course, is bullish. But we still have that narrative around the weakening of the US dollar and the potential strengthening of the Japanese yen as we see shifts in terms of sentiment around monetary policy over in Japan. Now, in terms of let's just jump into the commodity space. You can see that silver has grabbed the headlines, and it continues to do so because it's kickstarted September in pretty incredible fashion. On the flip side is Palladium, and Palladium's an interesting one. We've seen platinum and Palladium really trying to regain traction, in part in association with the sort of move back towards fossil fuel vehicles, with Donald Trump reversing some of the credits for EVs, and so we're seeing the potential for increased demand for catalytic converters. So that sort of fading a bit under the Palladium story potentially. The silver side of things, we've kind of got two stories playing out at once, right? Number one, you have this idea of like the growing debt that we're seeing around the world, the fear around the devaluation of fiat currencies because they're just going to have to issue more money to be able to pay for this debt, and it's only getting worse and worse and worse, right? So that makes people think that fiat assets are not worth the money they're printed on and start moving into other areas like precious metals. At the same time, we're seeing rate cuts coming into play. That, again, is feeding into the same narrative in terms of monetary easing and the devaluation of currencies, and people want to get into the likes of gold and silver and like. Whereas at the same time, we're of course moving into a phase where we expect to see greater economic growth. That greater economic growth should benefit silver over gold because it's an industrial metal. It is utilized more heavily for building, for electronics, for a whole host of reasons. And that's not necessarily the same with gold. It's certainly not got the same amount of use cases in a sort of industrial setting and manufacturing setting. And therefore, if we do see that sort of economic outlook start to improve, at the same time we see sort of monetary easing and the like, and the rise in terms of debt and the fear about central banks down the line potentially having to enact QE to be able to pay for this debt. And, it's all feeding into benefits for gold, yes, but certainly when you see the economy starting to look better or an outlook for the economy to improve, it helps things like silver in particular. So let's start off the commodity section by looking at silver, and we can see on the, here we go, on the long-term time frame, this is the monthly time frame, we can see that we're at the highest level here since September 2011. And as we draw down, this is the daily time frame. So we're seeing very clear sort of pullback, retracements and rallies. We're on the next rally at the moment. At some point, we'll come in for a retracement. We're certainly not there at the moment. And you can see it's been a sort of runaway move that we're seeing at the moment because, generally you'll sort of see a rally that's a little bit above the prior high. So a little bit above, a little bit above. This time we've just seen this massive surge to kick off the new month. Now, certainly there's fear at the moment as well because September is synonymous with underperformance of equity markets. So people thinking, maybe I should get into precious metals. So gold and silver doing particularly well as that reason as well. But certainly, like I said, I think soon enough we will see a pullback. When that pullback comes into fruition, then I won't draw a fib on because I don't know where the high is, but as long as we're not breaking the swing lows, and you'll start sort of looking at the retracement and saying, do I think it's going to be a mid-sized, shallow one? You treat the different retracements in different ways, but ultimately, unless we start to break the swing lows, the price swing lows, I see retracements as a short-term phenomenon set within a very clearly bullish trend. And like I said, Palladium underperforming, but we have been looking at this basing pattern here. And just because we saw a bad month, if we look at, say, the daily time frame, that doesn't mean that it's all over, because ultimately that bad month is a retracement of that really strong period from the April lows. Crucially, we're now starting to rally up through that first swing high. So this starts to signal that that pullback might be over. This could be a really advantageous time to be looking into this commodity. So we can see in terms of, let's just get a, say, Bollinger Band actually. Here we go. Bollinger Bands. That's one way of doing it. So we can see this and say, okay, so on the daily time frame, we're now breaking up through that middle Bollinger Band, which is essentially the 20 SMA. So again, that's a potential turnaround sign, because in the past, we generally don't break through that and close through that unless we're seeing the turnaround. So that's what we're seeing at the moment. And then if you look at the shorter time frame, you can see broken through the upper Bollinger Band and maintained it. A lot of the time you might see it sort of flicker through it, maybe a close, and then we break back down through it. This very clearly has a very different look around it. So if we maintain a rally up through this 1135 level, I wouldn't be surprised to see Palladium bottoming out from here. Very clearly a key market to be watching out for, following that multi-month rally that we've seen. And we've seen some of the heat taken out of it. Is it ready for that next leg higher? Look at this 220 SMA on the weekly, providing support here within that Bollinger Band as well. So really interesting time here for Palladium, certainly one to watch. It's been a big underperformer, but I wouldn't be surprised to see us in a month's time talking about it as being a strong performer for the month of September. I hope that's been useful. Make sure to like, subscribe and follow for more. My name's Josh Mahony, Chief Market Analyst at Scope Markets. Have a great day trading.